Hi guys, this video is on the auditor responsibility regarding laws and regulations that apply to the audit client, and this is a rather popular knowledge requirement that appears quite often as part of a big question in section B, normally for 4 or 5 marks. So let's see what the auditor's responsibilities are. They're covered by ISO 250, and we need to understand that according to that ISO, the auditor is not responsible for the prevention or for the detection of any non-compliance. In fact, the auditor is not expected to be able to detect all non-compliance with all laws and regulations that affect their audit client, and the responsibility for that, of course, lies with management. However, the auditor is responsible for providing reasonable assurance that financial statements are free from material misstatement, as we know very well, and the material misstatement could be caused by either fraud or error, and including potential breaches in laws and regulations, whether done on purpose or accidentally. Therefore, the auditor is responsible to be alert throughout the audit to maintain high professional skepticism, because there could be possible breaches that the entity has committed which would result in material misstatement. And depending on what laws we're talking about here, there are 2 different types of laws that we're concerned with, and depending on those, we might have different responsibilities as auditors. So the first type of laws and regulations is the ones that have direct impact on the financial statement balances and disclosures. That is, any breach in those, of course, could lead to material impact. The second one is the laws and regulations that do not have direct impact on the financial statements balances, but could affect the entity's operations in a material way, including their ability to continue as a going concern. So let's look at the first type of laws and regulations. Here we're talking about such laws, for example, tax laws or pension laws, which if the entity doesn't comply with, that would lead to a misstatement in the financial statements. So imagine, for example, you have a company that you're auditing and they did not deduct income tax for their employees, or maybe they did not make pension contributions towards compulsory pension scheme for their employees. That could lead to breach of those tax or pension laws, and that could lead to misstatements on the financial statements. That's why we say this has direct impact. And when we think about such laws with direct impact on the FS, we can say that the auditor's responsibility is to obtain sufficient and appropriate evidence that the entity is compliant with those laws. When we think about the indirect impact, or the laws and regulations which do not have direct impact, but could affect the operations of the entity and its ability to continue trading, just imagine breaching laws that result in quite significant material fines to be payable by the entity. Those will require most often a provision to be made, or sometimes it could be a contingent liability disclosure, depending on timing in relation to year-end. And they could be so significant that a lot of cash might have to be paid. They could lead to more serious issues, such as reputational damage, such as, if the breach is quite serious, potential withdrawal of some licensing that the entity might have by the regulators. So such serious breaches may not directly immediately cause a misstatement in the financial statements, but they could have material impact on the financial statements indirectly. So with those, the auditor's responsibility is to complete specific audit procedures, to carry out procedures which would allow the auditor to confirm compliance or non-compliance, potential non-compliance with these laws and regulations, and procedures that the auditor would carry out in such situations would be discussion with management to identify whether the entity is compliant or not, and of course, quite importantly, reviewing correspondence with those regulators or the government that would be concerned.